Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Sorry, I was not quite ready there because I was grabbing a Kleenex. But anyways, let's go to the charts. If I can find my my chart here. Oh, that's not it. Where is it? Oh, there we go. All right, treasuries. Okay, so yesterday we had a decent rise yesterday. That was kind of the one that we played. You know, it wasn't like huge, but when you look at it in the larger picture here, you know, it was not insignificant. It was a pretty big move. We're not too high, so we are going to be reaching some areas where we could expect some resistance. So that's where we're at there. S&P 500 didn't really do a whole lot yesterday, to be honest with you. Oil still down there. Gold and silver. Well, gold and silver were pushing up to new highs. They have since kind of come back, but not too much. So they still look pretty good over there. Copper, a little bit of a pullback yesterday, but recovering it. So it's kind of a wash. And then the Japanese yen still yet trending a little bit higher over the past few days with the dollar cratering. Excuse me. I need to sneeze. I think we're good. All right. Anyways, the dollar heading down towards that 101. So again, you know, the dollar is falling pretty quickly here. This is not necessarily the end of the world. Anything above 100 is still, like, historically speaking, relatively high. So, and you know, the markets are going to like that overall. So it's kind of a good thing. Bitcoin, well, there was that like slight pump above 60,000. I did find that there was a tether print when we saw that rise there. And then it came back. So Bitcoin is not getting a lot of traction when their big buys come in. This is a well, I mean, it's kind of been like that for a while in Bitcoin. We'll come back over here to the main screen. It's kind of been like that for a while in Bitcoin, but now it's really starting to stand out. Even the regular people are starting to notice this. I think Bitcoin has a problem here. But we'll see. That could change very, very quickly. So, one thing in particular that I kind of think could change that is the election. So let's see here. Give me a second, real quick. I'll pull up a few things here for you. There we go. And one other thing. Okay, so this is kind of a weird thing I'm gonna show you. All right. So there is a pollster that is generally considered to be a Republican-leaning pollster named Rasmussen Reports. So I wanted to, since I'm gonna bring up Rasmussen, you know, I kind of have to pull up the pollster ratings because people are gonna say like, oh, they're Republican biased, etc., etc., etc. But you'll notice if you go to 538.com, they don't give them a rating, but their poll score is -0.3. In other words, really, really good. It's better than their top 3-star rated pollsters. Okay. Now they get a transparency score of 3.1 because they don't really go into how they do their polling and all of that sort of stuff. But generally speaking, okay, Rasmussen actually is pretty good. And if anything, I would say that Rasmussen is valuable to look at because of how it contrasts with other polls. And there has been some talk going around that the polls out there are kind of have some sampling biases, that they are probably oversampling former Biden voters too much. Okay. But what is Rasmussen seeing this morning? Because they do a day-by-day poll. Okay. Well, when Harris stepped into the ring, her numbers, went up very quickly. They started at 37. They got all the way up into the 45 range. According to the Rasmussen poll, she was never ahead of Trump. But now, on the poll that they released or not that they released, but that includes the 19th, okay, which was what, Monday? Essentially, all of this time since we've been talking about the economy, because remember her speech was on Friday. We were talking about it Wednesday, Thursday. Okay. I guess there's the 18th. Do they do the 17th? No, they don't do the 17th or the 16th. Oh, 15th, 18th. Okay. So you can kind of see that weekend came through, and now Harris's poll number is collapsing in the Rasmussen poll, at least. Okay, so there has been some, what's with the notifications? There has been some arguments that the market sentiment is being driven by the presidential race, and that the market thinks that Donald Trump would be good for the market, and the market does not think that Harris would be good for the market. And Harris was leading in some polls, and so some people thought that maybe, especially gold going up, could be traders getting concerned that Harris is going to win. Now you're seeing Harris's poll numbers collapse in the past day. So that's kind of an interesting factor to note. So back to Bitcoin, Donald Trump has decided that he is going to be a pro-Bitcoin president. That was not the case when he was president before. They were kind of like avoided taking a position on it to some extent. There was still a little bit of regulatory animosity towards Bitcoin at the time, right? And then the Democrats, or Biden in particular, has been anti-crypto. And now all of a sudden it has become a pretty partisan issue, which is really weird to me, because when Bitcoin started out, I just remember reading about it on Reddit, and it seemed like a far left anarchist kind of thing to me. Now it's become a Republican thing. It's makes more sense as a Republican thing, but I digress. That could help Bitcoin. That could be one of the things that could change things around for Bitcoin very, very quickly. Okay, you can just kind of see where that's going through. Okay, so let's see here. You guys are talking about rollovers. Why are you talking about rollovers? Okay, so so you have to wait 3 more weeks to go until the rollover date. Keep track of both play. Well, it depends on which instrument you're using. Okay, so if the instrument that you are using, or that you are trading rather, is the index futures, ES, then your rollover is essentially 3 days before the options expiration for the month in question. Okay, so the month in question is September, right? We're on September contracts. So the rollover date will be the third Friday minus 2 days. So basically, you're going to be switching over September 18th, 19th-ish. Okay. For the treasuries, the treasuries are a little bit different because equities are cash settled future. Okay. Treasuries are you deliver the actual commodity, you deliver the actual treasuries. And the way that works is that there is essentially like a first call. Like once you are into the contract month, you can, if you own a contract long in that month, you can be called to deliver that contract. So 3 days before that, so in this case, next Wednesday will be when we roll over our instruments. Okay. And then of course for the micro treasury yield futures, those go on a month by month basis. So you could potentially trade September contract on next Friday. Okay. Octavia says, great point. I did not see that poll. Thanks. And Uzi says, that whole 25% unrealized tax idea, I can't believe they're going to run on that. It really is. So this comes back to the point that I made yesterday. I will make it again. This is one of those things that's like, if I had the time to clip this would maybe make a good 1 minute short, right? There's a key piece of information about the Harris campaign and this whole kind of presidential campaign that's going on that I never hear mentioned that seems like a pretty important point. Nobody brings it up. Kind of makes me wonder, what is that piece of information? Kamala Harris was an economics major. Her major was politics and economics. Her father was an economics professor. He kind of dabbled in like Marxist, so because it's not like there's a Marxist economics degree or anything like that, okay? But he was an economics professor that the research that he did was kind of on more Marxist economies, okay? He was in that whole world. So Kamala Harris knows. She has to know. You can't go through an economics program, graduate, and not know that price controls have a history of failure. And I really don't see how anybody in the field of economics could go through and not know that the problems with taxing unrealized gains. It's a really dumb idea. So what's going on here? One theory is she's actually a communist. She believes in these ideas and she can't help herself. Legitimate theory. I don't know how you prove that that's what's going on, but it fits with the facts, right? We can see the policies that she is endorsing. They're pretty crazy and outside of the let's say the general consensus on good economic policy. Okay. But the other theory is that she knows, and this is my theory, she knows that these are bad policies, and she thinks that they will help her anyways. She thinks, oh, I just go and tell the voting populace what they want to hear. They want to hear that we're going to go after, corporations. They want to hear that we're going to go and confiscate wealth from the rich. And that strategy has worked really well for Democrats for years. You go and you notice in polling and all of this other stuff, whenever political issues are going on, as soon as the Democrats are able to turn it into, oh, those rich people, we need to tax them more, people love that. And I think that that's what she's doing, is the Democrat Party has kind of turned into this unabashed, go after the rich kind of a thing. And what has happened is Kamala Harris's political instincts are so bad that she's gone ham with it, essentially. And I think that's been her whole political career. Because how do you get a senator that graduated in economics and supports these kinds of policies. It's because she thinks that that is her ticket to power, not that she actually believes that they are good policies. So I think that what you're going to see in the future is Kamala's probably going to avoid talking about those things because it is now starting to hurt her in the polling. It may already be a fatal wound, right? Now that people can see, like, oh yeah, actually, the Republicans are right. Kamala Harris is like super extreme here. So extreme that a lot of moderates and Trump haters are gonna vote for Trump over Harris because they don't want Harris. Which is super wild to think about. But that's the world that we live in today. Okay, can you give a basic definition of what order flow is and why it is the most important? Well, it's not the most important factor in trading, Adam. So, when we want to talk about like what is the most important factor in trading, I don't know what I would say is like necessarily the most important factor, but an edge can come from just about anywhere. And the issue with edge is that edge means something that you're doing better than everybody else, right? It's an explicit competitive advantage that can come from anywhere. It can come from order flow. I would argue that it's more likely to come from informational inefficiencies, things that you know the economic data better, you know what people are talking about better, and that gives you an advantage. Okay, but edge can come from anywhere. Okay. Order flow, though, ends up being a particularly important concept to learn and understand because orders are what makes the whole thing move. Okay, like that's what, when we're studying order flow, we're really studying the market at its most basic level. What are the basic rules of the game that causes this whole thing to turn, right? And so to really understand why the market does what it does, you have to understand order flow, and that's why it's so valuable. Okay, so what is order flow? Order flow is study of the orders in the market as informed by the depth of market. Okay, or let's not say as informed, but informed by the depth of market. So normally you just have price and volume. There are some things that you cannot see the deep mechanisms of what's going on with just volume. You need to be able to determine, you have market orders are always being matched up against limit orders. You have to be able to determine what the sign of, that's what we call it, the sign. When I say the sign, I mean whether the market order was a buy or a sell. Okay. Once you have the depth of market, you can sign the order flow. You can see whether those market orders are buys and sells. Okay. There are also things that happen based on both the resting liquidity and the latent liquidity. So here again, you have to be able to see that depth of market to be able to see these behaviors and understand them. Okay. Now, the actual edge that order flow is going to give you is going to depend on a lot of different things. I think that more generally, order flow is a really good base. Okay, it's information that can get you to break even, and then you find your edge, and then you're profitable, right? Okay, and that's all of the information that I give you here on this channel. You go and watch my order flow video series, and I talk about all of these things, particularly the later videos where we talk about empirical properties of the markets and the inelastic theory of markets, inelastic markets theory. Okay, we're only able to know those things. This is empirically peer-reviewed research, golden standard in terms of proving that things that are actually things. And the way that we're able to know those things is because of the study of order flow. Okay, so that's why order flow is so important, right? but the basic definition of the order flow is it's studying the orders, and it includes the depth of market. Okay, so I'm studying all of the orders, the market orders, the limit orders canceling. We got 3 main categories there, and then there's buy and sell of each of those. Those are like basically the 6 fundamental market forces. And those 6 fundamental market forces are why markets move. Like, you explain what is going on with those, and you can explain why the market moved the way that it did. Okay. So with that said, coming back in here to today, because I answered a couple of questions and I didn't write the notes here. So let's do that. Okay, so flows today, and I didn't even look at what we were pay attention to what we were doing. Because don't we have today the revisions numbers and stuff? Okay, so there is 20-year bond auction, FOMC minutes, non-farms, the yearly revision. I don't know when that is released. When does the payroll data revision get released? By the way, I got new I got the headrest in. Pretty nice. When I'm standing here, I've come to the conclusion that part of my problem was that I like to sit like this. I want to be a little bit back. I want to be a little bit relaxed. Maybe I should do that for the, I don't know. It's sitting on it right here right now is kind of a little bit, but like it doesn't support my back. I kind of do this and then I'm sitting like that all day. So I need to be sitting back a little bit. And that means that probably I should have the chair, up like this, sitting up straight. It's funny because when I had my wife sit in it, and I was like, the thing that I hate is that the first notch back. Oh my gosh. Okay. Anyways, the first notch back is too far. Like, I think it should be halfway between there, and then I was like, okay. Anyways, okay, so there was a really strong buy there. That change right there, all of a sudden, like, remember we were talking yesterday about cumulative delta? Well, cumulative delta just changed by 10,000 in 1 bar. That's really extreme. That I kind of, in this mode, kind of makes me think that the gig is up, that there are large meta orders going long and they're panicking and jumping in and so forth. It also kind of suggests to me that there might be some kind of other piece of information that we're not aware of, like what's going on in Israel, for instance, has kind of been moving the treasury markets as of late. But a big transaction in an area like that also kind of creates a hole and creates an area where we don't necessarily have a whole lot of edge. So I'm a little bit weary about buying the high of this. So I think it does bias me long. I'm going to let it do its thing. Okay. Yeah, the flows are long, I think. Well, so when I go and I look at this information, bond auction, generally that's a sell into the auction and then buy afterwards. So that's like a net buy. The FOMC meeting minutes I'm not entirely sure what people might be, hedging for and everything like that. It may be a dovish thing because it may be, hey, look, like we are really concerned about what the economy is doing here, and it might be like that. And then the non-farms yearly revision is largely anticipated to be like revising things a million jobs down. So that's probably a buy. So I think that my conclusion on the flows is speculatively long. Okay. We should also add on to this, been unusually busy week. So normally, and then there's Jackson Hole, right? So normally the week going into Jackson Hole is really, really quiet. We've actually seen a decent amount of flows. Okay. But like that's, again, here, a market that is like really super, super quiet. And then all of a sudden, tons of volume comes in all at once. And then it dies back down again. That's not a good location for a long. Okay. That is a place where price is probably going to pull back a little bit and get stuck. It means that we may get a trend later on, but it might frustrate you a little bit there, unless it's going to immediately continue trending, which so far it hasn't. Okay. So when I see big orders come out like that, that kind of means to me, like the real trade here would have been, doing this right from the beginning. Maybe I talked a little bit too much, and would I have taken that one? No, I don't think so, because I would still want to see the order flow going long, but I might have been able to have bought 21 and then be up 2 or 3 ticks. Right, that's the trade. And then you see the big volume come out. Then that's let's hold it and see if it takes a little bit clip further, but that might be a potential profit zone. Okay. Back to Adam here. Question: ICT states/argues that price is purely algorithmic. I don't know if this might be related to the last question I asked, but do you think it's otherwise? Okay, so it's not. So ICT is completely full of shit. is really what the deal is. So ICT's claim is that he basically wrote the algorithm that the markets are based on, and that the trajectory of price is completely deterministic and determined beforehand. So he claims there is a pattern, there is a way that this thing is supposed to move, that the powers that be have decided is the best for them or whatever, and the market follows that, and so all you got to do is understand that pattern. Okay? It's absolute nonsense. I have a video, you go back, I don't think it's my most recent video, but it's like 2 videos back, smart money concepts, because that's what he calls his stuff, is smart money concepts. I didn't want to, focus on the creator itself. I wanted to focus more on the strategy, because if you go out there and you search for stuff about ICT, all you're going to get is stuff about him as a person, because he says a lot of crazy things. He has been involved in fraud in the past. He was encouraging a student to take out student loans to trade, which is fraud. So he got prosecuted for that. And there's iMan trading. He has a video about it, going through all of the crazy things that he's done and said in the past, right? Well, that is an important thing to understand if you're gonna consume his content and all of that sort of a thing. But I'm more interested in the market, right? What does the market actually do? What can we actually prove about the market? So is there a pattern and whatnot? So I made my video focused on that. We back tested his most popular strategy, that what they call the silver bullet. And what our research shows is that there's no edge in it, that it was a completely random strategy until the point that his YouTube channel started to get mildly popular. When his YouTube channel started to get mildly popular, you started to see the strategy start to make some profit, probably because of all of those people all kind of following the same setup. But then when the YouTube channel became massively popular, like he got into the hundreds of thousands of followers and so forth, this strategy completely collapsed. And like after that, almost every trade was a loser. Okay, so what that or is in line with, of course, I would consider it anecdotal evidence of this theory, but this is a theory that we have a lot of empirical evidence and is basically the conclusion of most major market microstructure researchers, which is that individual traders are studying the market and reacting to the market. And so if there is any kind of a pattern in the market, people sniff that out, they start trading it, and when they trade it, that changes the behavior of the market, essentially. Orders move market. So if I come into the market and I buy a certain number of, thousands of contracts, like I come into the treasuries here and I buy 50,000 treasury contracts long, okay, that is going to have the general effect of moving the market up. And that's well proven, and we can even quantify, like based on the market conditions, the liquidity and that instrument. There are a couple of different ways of doing it. Like we can come in and we can execute a 50,000 and see how far it moves, and then use that information to kind of judge based on how many contracts, how far is the market going to move. We can calculate that. It's called the square root law. It's actually a formula. It's y, which is a scalar specific to the instrument that you kind of want to, like you execute it once and you figure out what this y is. Omega is the volatility of the instrument times the square root of Q, which is the size of your order, over V, the expected volume for that time period. And that will equal the impact. Okay. So the idea that the market is like some algorithm determines where it's going to go and everything, complete nonsense. So what is the actual truth? Orders move markets. In order for us to make an accurate prediction about where the market is going to go, we have to understand what the orders are going to be. So that's why I come in and I do this analysis of the flows. As I come in and I say, these are pieces of information that can potentially tell me whether people are going to be buying or selling, right? There's going to be hedging for a bond auction, and the market kind of absorbs that supply. And then it's, once that supply has been absorbed, they're free to move up. And so there's generally uptrend after an auction. Okay. FOMC minutes, there are going to be people hedging and speculating on those minutes. There's going to be people hedging and speculating on the revisions. And since those revisions are expected to be weak, that probably means that they're going to be buying treasuries, right? There's Jackson Hole, which kind of makes people not want to trade. It hasn't been the case this week. It's been a little bit noisier than normal this week. But I digress. That's another thing that we know about the flows, right? So now that we have our analysis, then we can kind of come in and say, oh, okay, the flows are likely to be long. So now so I'm stalking along, essentially. I don't know. Well, I don't think I really have a good excuse to not trade today. I do kind of feel like I missed the opportunity though. But I'm stalking along. And so now I'm looking for two things. One is I'm looking for kind of evidence that the flows are indeed long. We have gotten that, right? Because we had a little bit of a bust up. This whole thing right here. I don't like trading after a big bar like that, okay? When I see the big orders, I avoid those. I want it to be quiet when I take my trade. But you can see we are getting gentle uptrend. There is buying. So we see the evidence in the actual flow that my prediction, that my analysis of the flows is correct, that we are likely to be long in treasuries today. Okay, so that's the first thing. And then the second thing is a good entry within there. Like I don't necessarily want to buy, if we're going up, I don't necessarily want to buy the high. I only want to buy the high if I think it's breaking right then and there. Otherwise, I'm going to wait for it to come back a little bit, and it's going to quiet down a bit and find a quiet spot to get in before the next wave of pushing us up comes. Okay, that's what I'm doing. But Halio says, I wrote the algorithm that magically controls the market, but I'm unprofitable. It's funny. So he said all of this stuff and he talked big, and then there was a Robin's Cup, okay, which is basically a okay, so here's the thing. You gotta understand, guys. This is the thing that's so funny about it, okay? The majority of the people that are making money in futures are trading momentum trend strategies, which essentially means I come back out and I look at instruments on a daily basis. That's why I have these daily charts. And I come in and I say, trend is up in the treasury, so I should buy it. Essentially. You're not on an intraday basis, but on a longer term basis, I'm going to buy the treasuries or whatever the deal is, right? And then if you were in a momentum long, you would probably be in it like way back here. You'd probably be, long from way back here and still long, right? Okay, so there's all of these commodity trading advisors, strategies, and so forth. And so they made the Robin's Cup for those guys to see who has the best trend following strategy, right? And some of these guys can make a lot. They can like double their money and whatnot, right? So that's kind of what the Robin's Cup was designed for. I think the whole idea of like you as a retail day trader coming in and entering the Robin's Cup is kind of silly. Like if you won it was probably because of excessive risk taking and a lot of luck, right? But there are some people that are doing the Robin's Cup. They're kind of doing trend strategies. They're doing really well. He was, trying to compete in that arena, and it was just like what you expect. He was taking on excessive risk. He was doing okay at the very beginning, and then he faltered because that's not really a long-term edge, right? Taking on risk is only an edge when things are normal. You know what I mean? He was in the Robin's Cup though, wasn't he? And then there was this whole other thing about, or maybe it was Vinny that got into the Robin's Cup and didn't do very well. Like the thing that's the thing that's funny about it is that these guys, as far as I can tell, are narcissists. Like that's really the long and short of it, is that you have these guys, they're narcissists. So a narcissist gets into day trading. First thing is that they can't admit to themselves when they don't have an edge and that they're not doing well, right? So it's always going to be like they take excessive risk, they do really well for a while, they'll tell everybody about it, and then they blow up and they're not going to tell anybody about it, because that, having to admit to everybody that you blew up, that's like a narcissist can't do it. A narcissist just can't do it, right? Because it's too painful. That's like the whole thing that drives this narcissism is this kind of like wound about your self-image, that you're concerned about what other people think about you, essentially. That's kind of one of the things that drives chronic narcissism or clinical narcissism, let's say. Okay, so you have this contest out there, and they can't help it. They just can't help but go into it and expose themselves. It's so crazy. I'm handing down my legacy trading to my... Oh, yes, I heard that. I think I remember seeing something like... Basically, he was live streaming for a while, and then he stopped. Right? Yeah. Okay, so going back here, Adam says, meaning no matter what, there is still a standard algorithm that can account for everything? Or wait, let me go back. I think I missed another comment.
Let me refine what I wanted to ask. He argues it is a collection of algorithms that forms an ultimate algorithm for everything based on things like time, order flow, price, etc., meaning that no matter what, there is still a standard algorithm that can account for everything. No, there is not. So the first thing here is that, you know, if you want like a most complete kind of prediction of things, then it is going to be predicting the orders, okay? But there's a lot of randomness in that, right? There could be a guy out there, he needs to buy. You're never going to know that. How can you possibly know? It could be that he's doing it completely on a whim, right? And even if it's completely on a whim, it's going to move the market, right? So the orders determine where things are going to go. A lot of the orders are really, truly, honestly, just random. So the idea that you can have some sort of an algorithm that like predicts everything is nonsense. You can create pretty good estimates of what the future flows are going to do. And a lot of these firms like Goldman Sachs, they have flow analysts that give you estimates. Essentially, they say, okay, CTA's momentum in equity indexes is long right now, and that is probably going to bring in 50 million worth of buying into the market in the next week, right? And they like release these reports, right? And that's kind of the sort of stuff that we're looking at. Okay. But his claim that like like it's because you got to understand what he's saying is essentially that the market will move into an area and like stop everybody out and then reverse and go the other way. That's essentially his overarching strategy. Okay. Now, when you look at what the market has been like for the past decade in the era of easy money, it's easy to see why people would adopt that strategy and think that. Because what has been the most effective strategy over the past like 10, 15 years? Buy the dip. You go into S&P 500 futures, you see it going down, you wait for it to go to that spot where like everybody's panicking, and then all of a sudden the market just magically floats up higher. Okay, that's kind of more of a function of like the easy money era and all of that sort of a thing. But people think, they're kind of seeing this, they think, oh, it's a pattern, it always works, what yada yada yada. Okay, but as somebody as I did work for a bank, okay, I worked for a prime broker. I was on the technology side. I was a programmer. It's kind of funny. Sometimes I wonder how much of me these people out there are incorporating into what they're doing. Because I was the first one out here doing this. I would say that there were other people that started streaming at the same time, but I started streaming essentially when it became available on YouTube, when it became widely available on YouTube. So I've been here from the very beginning, and sometimes I wonder, because I work for Prime Broker and I'm a programmer and all of that some of these guys kind of stole a little bit of me and then went and tried to turn it into this huge exaggeration, right? I worked for a firm. I knew a lot about all of the different pieces of information that they had to be able to make decisions about the markets, right? I think the system that was always the most interesting to me, it was called SecDB, which stands for Securities Database. They post a lot of public information about it, so I'm not giving you anything, that you can't find out from them. But essentially what SecDB is it's an object database. So normally a database is like rows and columns, right? And then maybe there's keys that associate this row with rows
in other tables in the database, right? That's your traditional database. And the weakness of a traditional database is that a traditional database isn't very good at showing relationships between objects. And so there's another type of database that is typically custom, that is more of an object database. And so what they do is that they will create this object that represents a particular security, like the 10-year treasury. And then they'll have all this code in a 10-year treasury that says, okay, the value of a 10-year treasury can be estimated with all of these different kinds of models to kind of, for us to decide what that treasury is worth. And a large factor of that is going to be other assets. Okay. So now that 10-year treasury can be tied to another asset. So perhaps another asset that we might want to look at is a bank stock, right? So if we're trying to value a bank stock, we're going to do all of this stuff about analyzing their balance sheet and their future earnings to determine, discounted cash flow sort of analysis to determine how much that stock is worth, right? And one of the things that's going to factor into that is how much money are they making on the treasuries that they own, that they use as collateral for all of their transactions. Well, we can look at the interest rates to determine that. So now there's a relationship between those two things, right? And basically what happens then, well, there's two ways that this gets used. One is when they're trading it live, the specialists, they kind of have this model that says this is like what this thing should be worth. And this is like what flows we're expecting to the day. And here's what our clients are doing. And then they use all of that information to determine how they're going to do their market making, essentially. Right? That's how they do it. Right. The other side of it is they'll do kind of like these really big calculations to determine like what is my overall position in the market at the end of the day, and what are my risks? If interest rates change this much, how much am I at risk? And then they use that information to determine how to hedge themselves. That's why that bank, when the 2008 financial crisis happened, they went and they did their calculations, and they saw how much was at risk, and they went out and they bought insurance to hedge themselves against that risk before everybody else. It's just that they didn't really consider the counterparty risk, or ever imagined that AIG wouldn't be able to pay it out, and then that kind of caused all the problems. But that's how they're doing it, right? But it's not like some little algorithm that tells you, like, that can draw for you what the price is going to do throughout the day before it happens. That's nonsense. You can't accurately predict that, because so much of the order flow is indeed truly random, and regardless of why those orders are coming through, they still have impact. Like, that's why you can't really truly make super accurate predictions of short-term price. So what do? We estimate what those flows are going to be, and we wait for situations where we have some supporting evidence that those flows are coming in the way that we expect, and that we're in a good position where, we're unlikely to have price go against us, and we're likely to have price go in favor of us, and all of that sort of thing. Right? So, yeah, he claims that orders don't move markets, which is laughable. Yeah, so one of the things I think I would say he claims this, kind of the efficient market hypothesis guys, they will kind of say this too. It's like, if I come in and I buy 50,000 contracts, but I'm just doing it on a whim, then the market makers are going to say there's no new informational value, these orders are wrong, and trade against them, essentially. But that's not the way that it works. The way that it works is that if you're going to buy that many contracts, there's not enough liquidity to support it, and you're going to have to take some of that liquidity with market orders, and the net effect of that over time is going to be that it moves the market up. So one of the problems that you get in this is across the industry, man. I gotta tell you, I think it's so weird. It really is so weird because here, what I teach on this YouTube channel, I am starting to see some people figure it out and start to talk in this way. But by and large, most people haven't seen my YouTube channel, right? And I am the only one out there that is trying to take an empirical approach to markets, to say, like, here's what the actual research says. Here's what we can prove and what we can't prove. You got to keep in mind that when it comes to science, like what you can actually prove about something is usually very, very narrow. Most of what everybody is doing is they're chat GPTing it, which when I say they're chat GPTing it, I'm not saying that they're going in, they're using ChatGPT and using that to get their answers. What I'm saying is that they're taking all of this information that they've ever seen and absorbed in their entire life, and they're building it into this kind of machine learning model that just instinctively spits answers out for them that are kind of approximate. And when you're doing conversations and interactions with other individuals, that works really well and it's fast, and so those kinds of systems are really very effective. But when you're trying to understand something as complicated as the markets, that doesn't really work. You have to like really study it out and like prove specific things, and the things that we can prove are very narrow. Like I said, I can prove that the impact of a large order tends to follow a square root law. Okay. This is a super important thing to know and understand. Okay. This is one of those things that if you put into that machine learning network of yours in the front and, build intuition based on this thing, you will have so much better intuition compared to other people in the markets, because this is one of the most confounding and confusing things about the markets. This is kind of one of the things that makes the markets so weird and, doesn't do what we all seem to think that it should. What is it? Meta orders follow a square root law. That means if I come in and I buy 100,000 contracts, that's going to move the market up a certain amount, right? If I come in and I trade 200,000 contracts, how much will that move the market? And you would think, well, it's twice as much, so it should move the market twice as far. But it doesn't. It moves it on a square root law, which means that it moves at 4121, whatever the square root of 2 is, right? It's going to be the square root of 2. If you trade 3 times as much, it's going to be the square root of 3. And so in order to move the market twice as much, you're going to have to use 4 times as much volume, right? Because the square root of 4 is 2. Okay? That's well proven. How did we prove that? They literally got the data from a Bitcoin exchange, Mt. Gox. Before Mt. Gox went down, Mt. Gox gave these researchers every transaction, like all of the information that they had about all clients, so that you could see here was a large client buying a huge block of Bitcoin over time. And then they would say, okay, when that's happening, and then how much did it move the market? How big was it, and how much did it move the market? How much was it? How did it move the market? And they did that literally over thousands of meta orders. And what did they find? Follows the square root law. And then, and that was research confirming stuff that they had seen in earlier studies where like a bank would give them their order flow. And they would say, okay, every time that this bank was executing a huge meta order, here's how much it moved the market. And here's how many orders there were. And guess what? It follows the square root law. That's how they determined that, right? So that's something that we can conclusively prove about the market, but it's very specific, isn't it, right? Now, the thing that's so interesting about it, right? You notice you will never find this research out there that says that when there is a head and shoulders, we have a tendency to have a reversal then at that point, right? There's been people that have researched that and they find like strange statistical behavior around it, but it's not actually the edge that everybody thought it was, essentially, right? You never find a study like that, because if there's a pattern in the price, the market sniffs it out and gets rid of it, right? Removes it. So the things that you can actually prove about the market tend to follow a pattern like this. If I do this, this is the effect that it will have, right? So I can come in and I can say, okay, I'm going to trade a large meta order. It's going to follow a square root law. We know that, right? But does the impact that I have on the market change if I trade it this way versus trading it this way? And we often find that it does. So one of the really big pieces of research, probably the most consequential piece of research in the last 20 years, was a study released in 2000 by Almgren and Chris. What was the name of that research study? It's like reducing impact of large portfolio transactions. And essentially what they proved was that if you split your order up into multiple waves and you limit the size of those waves to reduce their impact on the order book, so that, you know, they put just enough strain on the existing liquidity to cause market makers to react, and as soon as the market makers start to react, then you back off, that your impact was less than other methods that people were using before, like trading based off of the VWAP, right? So that's where the majority of this what we can prove is, because we can't prove that, we can't know for sure what every person that's going to come into the market is going to do. And we can't we haven't been able to prove any kind of like these patterns, at least not on intraday basis. Okay. On higher time frame basis, there's momentum. That's a different thing. Okay. So much of what you've heard, I always got to bring that one up, because so much of what we have heard about trading is actually about momentum strategies, which is not a day trading strategy. Okay. That's the most recent video that I posted on this channel, if you want to go watch that. Okay. I'm gonna rewatch a video. Well, Adam, what you should do is you should go and watch my order flow video series. I think it's like 5 or 6 videos. The first few videos are, what are you actually looking at? What is the limit data? Here are some of the things that you kind of will see and notice. And then I start going into the research about it, and I give you a really broad overview of the research and some of the big conclusions that we get from that research. Okay, so the big thing about this square root law thing is that the markets are very inelastic. So if you come in and you buy something, the market reacts to it very, very strongly. You would think, I come in and I take $1 out of bonds and I put it into the stock market, that how much should that change the overall market cap of the stock market? Well, our intuition is that, you know, the market cap is like how much that company is worth. So if I invest $1 into that company, the market cap of that company should go up by $1, right? But what we actually find is that it goes up 5 to 8 times. 5 to 8 times. So you put $1 in, it goes up $5 to $8. That's crazy. Market is very inelastic. It reacts to markets very, very strongly. That's why everything is so complicated, right? Because it's not just, we can't predict every little thing that everybody's going to do today. It's that every little thing that people are going to do today, even some of the smaller innocuous ones. Obviously, our one lots don't have very much of an effect, but like the size that you need to get to where it starts to have a substantial effect on things is you would be shocked at how low it is. Okay, basically any kind of institution that is trading in the market will have a huge impact on price, big enough of an impact that you could like front run and trade them and make money from it, straight up. Okay, so watch that stuff first. Now you have like the empirically proven data. Now you're going to go back and you're going to watch these other influencers, and you're going to realize how stupid what most of the stuff that they're saying actually is. People are naturally want to, you know, we're hunter-gatherers. So everything about our brains is set up to do hunting gathering. Where do I tend to find berries? How can I find berries? Where do they tend to grow? What's the best time of year to harvest them, right? How do I track another animal? And these are all, these sorts of things are like remembering pieces of data, combining them all together, getting a quick answer about where I should go, and regression. Having a bunch of different data points and noticing kind of an overall trend in them that they're kind of moving up. That's another thing the human brain can do really, really well is regression. And so we try and do that with everything because that's just the way that our brain works. That's why you have things like astrology, where these people say, patterns in the sky have some effect on your life, that if you were born at this certain time of year, that you tend to be a certain way, right? That's where that stuff comes from. It happens naturally just because of the way that we as people think. And so you see it in markets as well. Thus, everybody comes in, they see some pattern, even if it's really not there, and they think they see some pattern and they trade it, and then they all fail and everybody's confused. It's like, surely there are patterns in the markets that we can make money from. How come we all have such a hard time making money from it? Well, it's because it's a different thing. Because you trading it affects the way that it moves. The way you trading it affects the way that it moves in a profound way that is much stronger than anybody ever imagines. No person ever came into this market and said, I bet you that if I took, I traded it, they would really move it. Nobody says that. Everybody thinks that they're insignificant. And our culture kind of reinforces that, because our culture in the politics since the 80s has been the efficient market hypothesis. The market always knows all and is always correct. It's bullshit, but that's what we've been taught. So we all come in with this idea of how things are supposed to work that is wrong, and that's why these patterns, they don't work. But we can prove things that you do things a certain way, here's the impact that it's going to have. Now you can kind of start to see how you start to get the strategies that actually do work, right? Especially on a day trading basis. If I'm a market maker, I'm going to have some expectation of the flows that are going to be out there, and I'm going to adjust my bid and offer based on my expectations of those flows. So if I think that everybody is going to be buying today, I'm going to take less fills on the offer. And I'm going to take more fills on the bid because I know that overall people are supposed to buy today. So I don't want to get myself big time short on inventory, and when it ends up being a trend up, right? That's how they do it. Or if I am a hedge fund, I think a big one would be the people that kind of trade the block orders, right? They know all of this stuff about other players in the market, what their strategies are, how they tend to act, how they behave, and they can anticipate that those people are going to buy before they do it, and how they're going to do it, so that they can kind of see the signs that they're starting to execute that thing. Now, the problem is that there's so many different ways to execute it, right? So, I wouldn't say that that's like, there's this little pattern in the price, I can see that, and that's something I want to buy. No, it doesn't work like that. But I know enough about their strategy, I can anticipate that they're going to buy, and then I can kind of look for signs that it's happening so that I can time my trade appropriately. You smell what I'm stepping in, right? I tell you, I'm sure that a lot of the longtime viewers here on this channel, because the people that we have that are on this channel are here literally every day, right? And I think the reason they're here every day is because I'm just so amazing and they love my personality. No, I don't think it's that. I think it's because the information that we provide, once you understand the true nature of markets, the empirically proven, peer-reviewed nature of markets, it's like seeing the Matrix. Yeah, you might not be able to predict everything that it's going to do. Like, our ability to predict price is like super, super limited, and we can only see it in certain situations. Not even every day, right? But when it does move, you understand what happened. You understand why and who was maybe buying and all of these sorts of things. It's like seeing the Matrix. All of a sudden, all of this stuff that was hidden from you, you can just see it. And it's almost like it's so obvious. It's like, how did I ever see this any other way? Right? Because everything fits, it answers all of the questions, and whereas before you were always constantly in the dark and nothing ever made sense. And right? Just why, again, it's so weird that there's not more people out there, digging into the empirically backed, peer-reviewed research. I think now I'm just kind of starting to rant. Clip that for your intro, maybe. I kind of come back to this because, like, what kind of got this all started was talking about ICT, right? So Uzi here earlier said, "I'll give ICT that he really knows how to work the retail audience, borderline genius at it. If he earns big from his YouTube channel, he clearly deserves it for that alone. Based on my calculations, he's probably made millions of dollars from his YouTube channel at this point, yes. Like, it scales really quickly, and going from, like, I have 15,000 viewers, and if you times that by 10, yeah, I would probably make millions of dollars. So with 15,000 viewers, the amount of money that you make from it is kind of inconsequential and is only enough to allow us to do all the things that we do for this channel. Like purchase market data to do a back test video, for instance, that sort of a thing. But when you scale up, it's like exponential, right? So, yeah, you scale up to hundreds of thousands. He's made probably $3 million from YouTube alone. And then on top of that, all of the money that he's made from people purchasing his nonsense courses and everything. It's a lot. It's a scam, essentially. He's not being honest with his viewers, but yeah, he makes money from it. Is he a genius about that? Well, maybe not. I think one of the things is that for some reason, social media responds really well to narcissists. Narcissists tend to do really well on social media. That's like one of my biggest problems is like, I need to be more narcissistic. I feel like I'm being a little bit narcissistic this morning, so that's probably good, right? I don't know. So when I get on this subject, that really gets me going because it's something that we know that gets ignored, and it's so crazy to me, But I think in general, my tendency is to not be narcissistic, and it hurts, right? If I was more narcissistic, then what I would tell you is, I make money all the time. I know exactly everything that's going to happen. And if you just follow me, I'm going to make you a millionaire, right? Narcissists will say that thing because they know that's the thing that people want to hear. That's the thing that's going to give people the highest opinion of them. And they don't think ahead and think about, but what happens when they go and they do all of that stuff and then they lose money from it, right? And you're responsible for it. And, that's a violation of different laws, and, they don't think that through, right? Another thing about it is that I think that some things on YouTube, there's a little bit of luck involved. So, we've had periods. I don't think that when we got lucky that it was in the right ways, right? When we got lucky and we had people come in and were interested in a video, it wasn't because about the empirically derived research, right? If the video of mine that had blown up on YouTube was the inelastic markets hypothesis, which is really the one that I think should be the one that YouTube should push, that would be the one that would have like the biggest impact on how people see the world and the most beneficial, then it would be a different thing. And then maybe the channel would have blown up, so. Namrus, there are intra-month rallies that occur in U.S. markets. My guess is caused by regular retirement fund investments. Yeah, could be, yeah. So there are like regular flows. Like this is I find so Namrus was the one that showed me this thing where it was like if you buy this currency at this time on these days over a period of 20 years. That it's profitable and that it makes money 53% of the time or something like that. And when you do make money, it's like way more than when you lose money. It's not the perfect strategy. Like, I don't think you could start a fund from it, but it was a lot better than most things that people look at, right? And so that is the thing. There are regular flows, and one of the ways that you could say, like, here's a regular flow is it's going to be based on the time of month, essentially. That, like, an index fund, they get withdrawals and contributions to their fund every month, and they have to buy and sell stocks because of that. And there's a certain way that they do it that kind of causes them to do it at certain times of the month and so forth. And it is mostly mid-month, yes. Right? Then you add on top of that the kind of like order flow patterns that get created by all of the funds that are doing stuff with options, and kind of like the whole clenching, unclenching that happens around the options expiration. That's another kind of flow that you can look at. What a lot of these hedge funds that are really running off of flows do, like say your Renaissance Technology, okay? I think that a big part of what Renaissance Technology does is they go to Goldman Sachs and they say, hey, Goldman Sachs, you have this flow information about what all of your clients did that day. You give that to us. So now they have all of the information to say, okay, what did all of the clients do last month, right? And then they notice patterns. Then they notice, hey, and it might not be like identify individual players, but they might be able to identify as like, hey, all of the index funds, they're buying around this time of month, right? Like the whole thing is market makers inject a certain amount of randomness into their bids and offers. So essentially, if you're programming a robot that is going to provide liquidity, one of the things that you should include in that is there's a bit of randomness to my bid and offer. There are some situations where I'm going to just let that bid be a little bit lower, or that offer be a little bit higher, or whatever the deal is, and just kind of a randomness to it, so that price moves around a little bit randomly, and that makes the market maker more money, right? So it's very difficult to figure out what's going on just looking at price. But when you have the orders, and now you kind of have the ability to like move that noise away and just look at the people that are really moving it and see the patterns and how they move it. And then they can make pretty accurate predictions. Okay, but again, those patterns aren't like it goes down and there's a fair value gap, and no, it's not like that. It's more like there tends to be buying on the last and first day of the month in treasuries. I'm giving you a straight up edge. This is one that we use here. That's like really critical for me. In fact, the first and last days of the month in treasuries tend to be buying days. Auction days tend to be buying days. That's a huge edge. That's an edge that you combine that with other information, you can run a hedge fund off of. And there are hedge funds that run off of those sorts of things. I think Renaissance front ran equities off a big option play. Well, I think that okay, so that's the first thing is I'm trying to sort out what you're actually saying here. Maybe they're front run equities. Yeah, I don't know. I think that Renaissance, you had multiple different edges and that it kind of evolved over time. I think that when Renaissance Technology started out, that their edge was primarily in momentum. That they were essentially a momentum fund in the 80s, right? But I think that what happened is as they were refining their momentum strategies and trying to be like, oh, you know, like I get in every time that momentum could be starting, but that means that I lose a lot. So if I can filter things out to know what's actually going on, then I can avoid some of those bad trades, right? And I think that what happened was they started purchasing order flow and going into all of those sorts of things, and were able to develop a model that was able to kind of predict where flows would come from based on correlated instruments. So basically, they kind of figured out that if this is the macroeconomic environment that we're in, I'm going to see money come out of this asset and it's going to come into this asset, but then that asset is related to this, and so I'm going to see this flow here and this flow here. And so they're able to sort out like second, third, fourth order effects from that money moving in order to figure out like where the best momentum plays are and which order flows are the best ones to try and get in front of. Something that you would only be able to do if you had a lot of data, a lot of historical data that like identifies the flows, essentially. Like this flow all belonged to one player. These flows all belonged to index funds versus hedge funds and speculators, etc., etc. That's what I think that they're doing. Because some of the discussions and things that I've kind of heard from them kind of gives me this impression that they have this market-wide sort of a thing that kind of says, well, you go here and here. This is similar to Aladdin. So BlackRock, is it BlackRock? BlackRock has this system called Aladdin that basically says like, okay, so we had contributions of this much, so we need to buy this much of stock this week. Well, okay, but that means there's like 500 different stocks that I have to buy. Do I just buy all 500 stocks at the same time? Well, that might not necessarily make sense, because what if I need to buy a certain amount of this stock and sell a certain amount of this stock? I can buy this stock, and that stock moving up might move all of these correlated instruments up as well. And so then that gives me a better price on this other stock that I need to sell. And Aladdin is basically able to look at all of the things that they have to do and create a plan that shows them how to do it in the most efficient way. So I think it's a similar sort of a thing. So I guess you could say like that to me is like the ultimate algorithm, right? So I think that there is like an ultimate algorithm out there, but it's just like, okay, there's a limitation on what the ultimate algorithm can do, because the ultimate algorithm is really more about like, if you do this, then here's like the most optimal way to do it, right? Or there's limited predictions. But the information that those are running on is order flow and not like price patterns. And that's the key thing here. It's like when you talk about ICT in particular, their thing is quote unquote price action. And I'm telling you, it's useless. There's absolutely no research backing up any of the ideas behind price action. I've never once seen a reputable peer-reviewed study that goes into a price action pattern and proves that it is a profitable pattern in the markets. Doesn't exist. And the research that we have suggests that it shouldn't exist, because if there is a pattern like that, people start trading it and it removes it. Even with these things like momentum. Momentum's a good example, because it may be the case that momentum that's already happened to momentum. Leading into the I would say 5+ years going into the COVID crisis, momentum was not performing very well. Some people said maybe it's the easy interest rate environment, but other people said maybe it's because we've taken all of the edge of momentum out. And I think that there's a very real possibility that that is what's happened, because then in 2020, momentum did 2020 and 2021, momentum did really, really well. And then since then, it has again started to underperform the market dramatically. So what we're getting this kind of behavior that's a little bit different than what it was historically. That suggests to me that there's too many people trading momentum and it has lost its edge. One of the things, I think one of the most important things that Renaissance Technologies did was, because they understand the impact of large meta orders, they can come in and they can say, okay, we're expecting this flow. or we're expecting this thing to happen. And that's going to move the market up yay much. That means that we can only trade this with X number of contracts. They know the optimal number of contracts to trade to maximize their money without tipping off the rest of the market to their edge. Because if it gets too big, then you start having too big of an effect on the market and the strategy becomes unprofitable again. Right? So their big innovation was, one of their biggest innovations was knowing how to size the trades appropriately so that the edge continues. That's why Renaissance Technology now has like a straight limit on how big the fund can be. Because if the fund is larger than that, the edge goes away. Isn't that interesting? Can you explain how to set up a volume stop in Jigsaw? Oh yeah, it's easy. So if you come over here, you press the little $ at the top of your DOM. It will bring up the order window. There's this little T button that allows you to switch it from horizontal or vertical. I like to have it vertical. And then you'll notice there's little radio buttons here. So by default, you will have auto. Auto says that what type of order that I submit will change depending on where I'm clicking. So if I click on the best offer, it will automatically be a market order. If I click on the blue column above that, it will automatically be a stop order, right? And there's this one button called stop limit, which basically says, so a stop limit order is, it will submit a limit order when it's triggered, which basically means like volume went off at that price, essentially. It's more complicated than that. So it's either volume went off at that price or the best bid goes above that price if it's a stop buy, but I digress. But next to that SL, there is an SV and a filth. So the way that it works is essentially, if you put a number in that SV, then even if you have it set to auto, when you submit a stop order into the market, it will be a volume stop. That's it. So I was like way too long-winded with that. Open up the window, put a number in the SV, place a stop. That's it. And the way that the stop order works for the uninitiated, I put a stop order right there. So it says 1 SV 300. So that's one lot stop order. V300 means that if the offer here goes below 300, then it will trigger. And that's the volume stops in Jigsaw. Very valuable, especially in treasuries, because you'll have in treasuries all the time. Like if you're trying to take like one tick and it's like, okay, I'm long 22. I want to get out if we're going to clear 21.5, but like the chances of volume actually going off at 21.5 are pretty high. So if you just put a stop there, the chances of your stop being triggered are really high. And you really don't want to put a stop there. But then if you don't put a stop there and it ticks through it, and then you're taking -2. So what do you do instead? You put a stop limit with a really low number on there so that it will only hit into it as she goes, like when it's being taken out. And you can have it as a stop volume so that like if there's so if you miss it, it will be a limit order. Maybe you get filled on the backflow. That tends to work pretty well unless it is like they're gonna trend against you like 3 ticks all of a sudden, and then you can catch the, then you have that limit order over there and you missed it, and you're gonna have to put a stop order in. Slippage, essentially. But yeah, really valuable tool. Kevin, so if we get a big jobs revision higher than estimated, then chances are higher we cut rates faster? Yes. Okay, so I don't know. Do you know when that number is coming out? Well, maybe, is that it right there? I don't know. Oh, actually, I did have it on there. I was looking for the wrong thing. That is it right there. Okay. So I don't know what the number was yet, but that probably wasn't like that they revised them higher. I'm almost certain, I would bet you that they did revise everything lower, but that it was not as low as everybody thought. Okay, my news squawk is saying that they don't have the release yet. So that's interesting. The market moved, but they don't have the release. So, like, the market is expecting them to revise the payrolls down by like 1 million. So if they revise it down by like 500,000, that's still like the economy is better than expected and the treasuries would sell. And that, you know, given that the treasuries did sell, I'm kind of have to guess that that is what happened. But again, the news squawk doesn't have the release yet. Twitter hasn't said anything, but the market did move, so that's kind of weird. Something's wrong and some people got it before everybody else, maybe. Or maybe there's these people out there that they know what the number is going to be, but they know like it's inside information until 8 o'clock, so they didn't trade it until 8 o'clock. That could be. Okay, well, I tell you what, man. That was a pretty big move. I'm a little bit mad. I wish that you had came in earlier, Kevin. Because at the beginning of the stream was like, okay, we know that we're getting this number today, but I don't know what it is. I looked over my list, but I didn't know what I was looking for on the list. It was listed as BLS Preliminary Annual Payrolls Revision. And it, you know, it just didn't register in my brain. You know, like this is one of those chat GPT moments where like I was kind of looking for a certain thing and because I didn't see it, I didn't see what was literally right in front of my face. So like I knew that it was coming. I just didn't know what time it was at. But you're right. They did have several articles. You know what? And I don't remember. I did read those articles, but I don't remember reading them and it ever mentioning a time. Yeah. So it was just a big mistake on my part. But I don't know. Maybe it's all for the best because, man, if I had tried trading that, I would probably be a little bit miffed right now. Because, like, it moved big time. It's completely retraced that move, and I don't actually have the number. Man, they were right up to those highs again. I'm hands off. There's no way I'm touching that, man. No, sir. No way. I'ma just you know, release the tilt on my chair here. Sit back like this and just do your thing. It's crazy. Do like it a little bit relaxed. And all the way up is too much for me. My wife's like, "Oh, that's perfect," and I'm like, "No, it's too straight up." It's like, well, it's not as bad as like an airplane seat. Okay, but airplane seat is terrible. The uprightness. Ugh. Let's see here. I was reading this tweet from Jimmy Urio. The strangest cope is they know these policies won't get passed, so it's no big deal. He says, I don't care. So what he's saying is there are some people in the Democrat Party that are saying, well, Harris is not actually intent on implementing that policy. She's just saying it because she knows that the base will love it, but she knows that it's not going to get passed. I'm not sure if that is better or worse than if she actually thought that they were good policies. I can't decide what's worse. I'm trying to figure out a way to say that to Jim in Twitter speak so it's short enough. I expected a pullback, but this is, yeah. I mean, this was not a pullback. This was like they full on tested the highs. How delayed are the numbers, right? Everyone refreshing the BLS right now. It seems to me like that some people got it and some people didn't. I'm betting you that it's like the banks got some tip on what the number was and traded it, and then everybody else, they didn't get the BLS number, and so they're all refreshing. Like, this is a mess. It's fishy. It's also, let me put it this way. I hope that the SEC and the CFTC investigate the order flow off of this piece of news, because there was a lot of flow that doesn't make a whole lot of sense off of a release that we didn't actually get. So to me, if Kamala Harris does not believe that price controls and all of these other things are good policies, but she knows that the Democrat base will love it, and so she's proposing those things, that to me is such an irresponsible thing. Like, you're doing long-term, lasting damage to our government, to our society, to people's understanding of the world, all for like a short-term political gain. That's so immoral, in my opinion. I can't read her mind, so I don't really know what's going on there. Check Forex Live's tweets. I believe this is the BLS revisions report. That report shows 1.97 million jobs in the year ending March compared to 2.9 million in the non-farms payroll. Though I'm told the data will be here. Okay, well, so that right there is kind of what I was saying, is that, well, but that is 1 million less. So that means that is almost in line with what Zero Hedge and all of the others, the banks and stuff, were predicting. So I don't think that one actually makes sense why they sold, if that one is correct. How come I didn't see that tweet over here, though? Oh, I see it now. I see it 3 minutes ago, though. That's weird. One of the responses is that is the old data. Well, now I'm just getting Jim, who is tweeting negative 676. So that is more like what I would expect to see. That it's negative. The revision is negative, but not a million. 60% of a million. That would be a sell. That would be a sell. Yeah, I'm you know what? I think that this is a piece of news that I just can't trade. Probably what the end result of that is. So we're seeing an empirically proven behavior of markets that well, I think I'm going to try and apply it to this situation. I think that it applies to this situation, but it's kind of interesting. So Jean-Philippe did this study where they looked for large moves in the markets. And then they said, okay, when this move happened, like, why did it happen? Was there a piece of news that drove it, for instance? And what they discovered was there was a lot of instances where there wasn't news and the market wasn't sure what happened, and that perhaps those moves were just endogenous, which is to say that, like, somebody got too big of a position built up, and the order flow just kind of spilled out in a certain way, right? And in those situations, the volatility persisted longer. Basically, the volatility persists longer when the market isn't sure about what's going on. And that is definitely what is happening right here, is that we had a big move off of the release, but then most of us didn't get the release. Everybody's kind of confused on what's going on, and so there's more volatility here. We are now almost 15 minutes after the news, and we're still seeing the treasuries zip back and forth across the entire range. This is now the second time that we've been up at the highs. Now, another theory that I want to bring up at this moment is that perhaps the non-farms revisions is not the most important thing that we're looking at today. There is going to be an FOMC meetings notes. There is also going to be an auction today that could be some buying. And so they could be saying, like, okay, the big scary news is out of the way. Now I can do the trades that I needed to do today anyways, and it just happened to be long. That's very speculative theory, though. We did extend the regular session highs there by about 2 or 3 ticks. Well, 2 ticks, now 3 ticks. Yeah, Financial Juice has nothing. Financial Juice 22 seconds ago says BLS payrolls revision scheduled for 10 a.m. Eastern time is not out yet. See, that one doesn't make sense that like nobody has it. I suspect that it's more the case that the media doesn't have it correct. Because Jimmy Oreo, he's posting a number. Where did he get that number from? Well, let's see in his comments. Well, let's ask him. Where did you get the number? You're gonna take the hero short? Okay. I'm a little bit scared by the fact that how far down we went. I don't know. Like the net order flow is long. The net order flow is long. I think I can kind of make a case both directions. I think for my strategy, I think that I still have to be long. Like, I think that the flows that I was expecting today were long. Or like the future flows that I'm expecting today are still long, rather. And the net change in cumulative delta in the 10-year treasury off of this move is long as well. It's not the case in the 30-year. But what I'm also seeing is steepening. So they're selling the 30 and buying the other ones. So I can kind of discount that. So I think based on my strategy that I would still have to be stalking along, and that in order for me to justify a short, that I would really need to see that cumulative delta start turning back down the other way in a more meaningful way. But obviously, what my strategy really says here is, am I the informed one? Well, I don't have the number, so I shouldn't trade it. Okay, so here is Christopher Barad, downwardly revised by 450K, 153.6 million based on QCEW through March 2024. Link below versus the initially reported through March of 158.1 million. But it was Forex Live retweeting Christopher Barad here saying that it was downwardly revised by 450K. So it downwardly revised from 450K. That seems to match what Jim Iorio said here. Because remember, we were expecting $1 million. Jim said negative 676. And that's a difference of about 450. Right, so I think what I believe right now is that it was revised down, but not as much as the market was expecting. Like maybe half as much as the market was expecting, and that is hawkish. But then how do we square out that it wasn't that hawkish? Well, it could be because not everybody got the number. And then in that case, Octavius's hero short trade is probably going to be really good. Actually, he's already like 4 ticks in the money on it, right? So I think that I may have enough to try and take a trade here. Well, I'm super scared about it, so I'm gonna play it sim, okay? Hey, I got a pretty good spot there. In line, at least. Okay. So, I'm noticing cost basis at 19.5. The wide range. I've never seen a situation like this before. So where this goes is going to be awfully interesting, right? Okay. Okay. I'm gonna fill that one. All right. Financial Juice says that they're still waiting on the numbers, so. Oh. They're saying that people are saying on social media that the event has been delayed. They're saying that, well, okay, so the information that we've got may be correct, but I don't know for sure. But it seems to me that there is still going to be like a release and probably some order flow moving off of that release. So positions are very dangerous right now. Yeah, I'm going to keep this to sim. Oh, wait, now I'm hearing. Now they're getting it? Yeah, but I'm not seeing a move in the market. So weird. Okay, now they're moving down. Okay, so News Squawk is just saying other news wires are reporting it. U.S. employment rose 1.3% in the year through March 2024, according to the BLS, is going through the wires, but they do not have the report in their hands yet. Let's come in here and change the title. Mass chaos as BLS revisions delayed. I will take that little range between 22 and 21 again if it lets me. I took 6. That's good. Make it. I'm happy with that. Even though I didn't take the trade and everything, like any of you having a position on in this makes me nervous. And so I'm really happy that you caught a winner of that and that you're out of it now, so I don't have to feel nervous for you anymore. I don't know what's gonna happen here. I've never seen a situation like this. This is highly unusual, and yeah, there is some pretty wild order flow coming through here. Probably should have put my bid down earlier because, you know, I might have been able to have crocodiled it, not be 3,500 in line. Yeah. Okay. So that 1.3% thing seems to be a different report. Eric Wallerstein says this is proof that we can't cut the BLS budget. Give them whatever they need, please. I don't know. Somebody screwed up something. I sure hope that they have some site reliability engineer over there at the BLS tearing their hair out right now, trying to figure out what's going on, right? Because if they don't have those people, hey, you know, I like my job, but, you know, I will do what is best for the good of the country. Okay, don't like those bids. Don't like those bids. In fact, I'm gonna try and puke it. Come on. No, I don't like that either. They should be hitting that. All right. I puked. I put in a limit order. They weren't filling it. They started to hit into the offer, so I got out. That was a situation. Okay, bad trade, obviously. But there was a situation where the order flow helped me. So, now that I've got my feet wet, I'm going to continue to let this develop. It seems to me that the official release has still not yet happened. And I'm also kind of wondering if, like, you see the release and that we get another, it moves down and then it reverses. Good boy. Nassim Taleb, remember that the Palestinians are the historical indigenous to the soil closest to the biblical figures? There's a lot of things that I like about Taleb, but something that really bothers me is there seems to be a lack of self-awareness in this guy. Like, I would venture as far as to say that he's probably a little autistic. I mean, how else would you know that much about statistics, right? Probably a little bit autistic. He doesn't seem to understand when what he's saying is being biased by other factors. And so he will latch on to some political idea or issue and argue it super hard, which is totally okay, but it's kind of important to note in that moment that that's your opinion. And he tries to argue it like that he's arguing an empirical study when you're talking about stuff that's not really empirical, right? Like the whole thing about who is really the historical indigenous people to the soil is actually a really complicated issue that people will see different ways, depending on which factors about it do they think are more important. And more largely, I'm just really disappointed that ever since he's become obsessed with this Palestinian issue, that we don't get any kind of content about statistics and the markets that we would find useful. You're letting me down, Nassim. I have more to learn from you. You're an old man. You don't have too much time left. You need to get it all out. Don't waste time with the Palestinian thing. I'm not sure he would be so incensed by that, though, because to him it's a really important issue. So you gotta do what you gotta do, but it really irks me sometimes. Okay, well, it came back down. So I maybe could have held on to that a little bit longer. Where did I get? I was at 22. So we're back to what would have been break even for me. But it went as high as 25. So, you know, that stopped me out. That kind of shows you the problem and why I'm a little bit hesitant to use my live account in those situations. Is that, like, I might be right overall, but I can't seem to be able to predict how much adverse excursion I can possibly get against me. And so it just always stops me out. Okay, now they're getting the oil numbers. Okay, so Forex Flow is tweeting about this, saying, okay, we've had wet fingers in the air of negative 1.97 million and negative 450K. We still have not heard anything from the BLS. In fact, I'm kind of wondering if the BLS is not sitting there going like, "Oh, what are you talking about? Everything's fine." Why am I all of a sudden getting a ton? Okay. Rasmussen reports says a year or more worth of lies by the Bureau of Labor Statistics are about to be revised today in a big market data study. Let's see how they close our tracking poll ends up to what they are willing to confess this morning. Oh, because they have a tracking poll on employment. Well, that's going to be interesting. Okay. Well, let's read what Forex Live has to say about it. They have posted a story on their website. The U.S. BLS was scheduled to publish benchmark revisions to non-farm payrolls at 10 a.m. Eastern Time. And then they give you the link. That hasn't updated, but we are watching closely. It's rare to have a hiccup in the release schedule, so it's not clear what is going on. However, a separate report that covers the same timeline was released. The Country Employment and Wages Report. It showed 153.6 million employed and a 1.3% rise year over year. That would be 1.97 million jobs, which is short of the 2.9 million reported by the BLS in the year ending in March. What's tough to square is that it also highlights 153.6 million employed, which is only slightly lower than the 153 million reported in the March non-farms payroll report. More confusing yet, economist Christopher Barad, who is usually bang on, also highlights the Country Employment and Wages Report, which includes the quarterly census of employment and wages, which is what the benchmark revisions are based on. He calculates 550K job losses, which would be something close, but perhaps slightly higher than the consensus. What's jarring is that there was a pretty big move at 10 a.m. in the dollar and Japanese yen, and so there are certainly people trying to trade this headline. Finally, our friends over at News Squawk are reporting a rumor of negative 818, citing a guy who said he called the BLS himself, though it would seem odd to me that they would give that number out over the phone when it had not been published online. Here's the tweet. Mark Bays says negative 818. Someone says, where did you get it? He says, I phoned the BLS myself. They've shut the number now. Sounds like bullshit to me. That sounds like bullshit to me. So what does that clear up? It leaves us with four different numbers: negative 930, negative 157, negative 450, and negative 818. The thing is, I really don't think this number matters, but it's great to see the suspense and taking for it. It is. This is kind of fun. This is kind of fun. I didn't, I haven't taken a live trade off of it, but this is kind of fun. Okay. Okay, now Financial Juice is reporting Labor Department preliminary estimate of non-farm payrolls benchmark revision would cut March 2024 level of employment by 818,000 or 0.5%, which is less than expected. But is that a buy or a sell now at this point? Well, I am getting some flows short. Mark Bays. Maybe Mark Bays was correct. Well, Forex Live is calling him a legend now because everybody is reporting 818, and that was the number that he reported. Or is Financial Juice reporting that because of him? I'm not sure what to make of this. So to me, 818 versus an expectation of 1 million is slightly less than expected. Slightly hawkish, but not super hawkish. We are moving down. I only got one contract filled, so I'm still down. Yep, you guys are telling me the same things in chat. Okay, I am pretty confident that that is it because they are telling me to go to Financial Juice and click the link. And I'm clicking the link and it's there. Yes, it's there. Okay, so now I have it on their website. 818 right there. So it is 818 for sure. It is. That is it for sure. This spike up and then down. Maybe that was everybody deciding that that was the actual number. So curious to me that now all of the flows are kind of slowly turning short. But again, we were kind of expecting revisions of 1 million. So, yeah. So I should be in a position now, right? Yeah, no, that's still too dangerous for a live trade, I think. Should I have taken my profits there at 17? Oh, I don't think I got filled to 17. 17 half? We are getting some pushback here for sure. We're going to cancel these orders up here, and I'm going to put a stop limit at my break even and try to relax. What is up? Well, no, it wasn't just Financial Juice, though, live action. The whole thing was that everybody was using the website to determine what the number was, and they didn't update it. I think maybe the BLS didn't realize that everybody was waiting for what that number was going to be. Maybe the BLS didn't think it was a big deal. This is kind of weird. Dude, I don't know. Like, I hope that we know by the end of the day what happened, but I bet you that even by the end of the day, we won't know what happened. Like, this whole thing is just crazy. Trading economics beats them all the time. Well, I don't know if so like if you're looking at like your web page, that's not as good as versus hearing it. So that's where the advantage of the squawk is. Yeah, Octavius, dude. Okay, so let me just review what happened. The BLS did repost the report, and it was 818. There was somebody on Twitter that said that they called and that they were told it was 818, but that they had since closed that phone line. But he posted that before they released the number, and the number that he was telling people on Twitter was correct. So this guy is a legend. He is a legend. He called, and he was right to call, and he gave us the number, and it was correct. Now, I don't know who that guy is. Let's go back. Find that. Who was it? Who is this guy? Who is the legend? Mark Bays. Bazy Blue. Bazy Blue. Twitter. Mark Bays. Free from the investment bank shackles. Oh, and he's posting I told you. That's all. Only 2 people like that, Mark. I'll give you a like. You're my hero. I'll follow you. I'll add you to our list. Where's our list? Traders. You were right. What else does he post, though? Okay, nonsense. Marvel stuff. I don't know if following him for market, putting him on that list is really going to help us a whole lot, but yeah, do you have Powell's number? I can call him. I wish. I'm not in the in crowd, guys. I need to work on that. I need to start, you know what I need to start doing is, well, I'm going to start skiing, but I think I need to start regularly going up to Jackson Hole to ski. Is what I need to do. And then I will meet the cool kids, and then maybe next time when they're having the Jackson Hole Symposium, I'll get invited. Because I don't get invited to that. Why not? I should get invited. I'm not cool enough. Maybe someday. Maybe doesn't mean it's only like an hour's drive away. It's not that far away. Wait, is it an hour's drive? I think it's more than an hour's drive. Hold on. Maps, Google.com. Jackson Hole. Jackson Hole, Wyoming. Where is the ski resort though? Oh, there's their airport. Where's the ski area? Ah, there it is. Teton Village. Okay. So right here. Directions. From yeah, my location home. Oh, it's 4 hours? So 4 hours to Jackson Hole, really? I mean, I've been there before and I don't remember driving 4 hours. You know what, though? I could fly. Sure that they have flights to Jackson Hole. Get on a tiny little ERJ. I could do it. I could do it every weekend. Because are they on one of them passes? Let's see here. Jackson Hole ski area. Jackson Hole Mountain Resort. Build your dream trip. Oh, I'll pull this over here now. You can see what I'm talking about. No, you cannot know my location. I'm sorry, but you don't need to know that information. They have deals. Early bird ticket sale. But I want like season tickets, maybe not lift tickets. Lift tickets, flex, golden tickets. Blah 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 blah. Ah. They are on the Icon Pass. Icon Pass. Here's the Icon Pass. Come on. Hit the trails. Buy now. See destinations. Mm-hmm. Mm-hmm. Okay, well, let's see here. Snow Basin, Snowbird, Brighton. Dude, I'm getting an Icon Pass next year. This year, I'm just going to Snow Basin. I already got my pass. I got a good list on it, or a good price on it. But next year, how much? An extra $400. Oh, except for that's the full one with no blackout dates. I'm okay with blackout dates. You don't even want to go on the dates that are blacked out anyways. Those are always like, you know, there's too many people there. You're like around Christmas and January 18th, 19th, yeah. Those are like the worst times to go skiing. But that one is actually not much more than what I paid. I think I need to get the Icon Pass next time, guys. Well, cool. And then I can go to Jackson Hole and meet cool kids, maybe? Maybe there's a cool kid watching this and just be like, I'll put in the word to Jerome next time. Make sure you get invited. But you know what? The BLS does have a phone number. Like, that's the thing. I probably could have thought, hey, let's call the BLS. Looked up their phone number. Let's see here. BLS phone number. If I search for that, what do I get? No, that's not it. Contact BLS. For answers to specific questions, see the following categories. Employment and unemployment. Let's say that it's that one. Labor force statistics. Non-farm payrolls report. National quarterly census. I think that it has to do with non-farms. Look, here's a telephone number. We could have called them, guys. Next time, we're going to call. There is a large vehicle outside doing something weird. I'm not going to bother and look at what it is, but I can hear it. Guys, this is going to stop out. Let's just take the product. Let's just take the... We'll see if we take one off, because it's time for me to get going. I don't think I really have the time to... Oh, it's going to stop me out. Like, okay, so like here's an example. 32 orders went off at 21. It hasn't stopped me out yet. Why? Because it has to go below 300 for me to put my stop limit order in. Okay, and it took the slippage on that one because it wasn't a stop limit. Ta-da! I can't even get someone from the post office on, right? Like, I'm surprised that this guy, he calls the number and he actually got. Yeah. Oh, Obsidian future decisions. Okay, so here's what happened to Obsidian. There was a revision to the non-farms report that got released today at 8 o'clock, or rather it was supposed to be released today at 8 o'clock. But the BLS screwed up and for some reason didn't post the report correctly. And so we all, you know, walked around with like our heads were cut off for 30 minutes trying to figure out what the number was. So if we were to come back over here onto this chart here to look at what happened. Okay, so this right here was when the report was supposed to be released. It did not actually get released. And then right here was when we confirmed what the real number actually was. So it was almost 35 minutes. So it was a little more like 33 minutes after the release that we actually got the number. Okay, so when that happened, there was a rise and then a fall. And now we're kind of reverting back to that number. I am kind of still wondering again, like, was that number that important? I'm not sure if it actually was or not. I kind of am thinking maybe the auction today and the FOMC meeting minutes might be more important. So I'm wondering here now, still, like, Jimmy Urio, he posted a number, and I'm like, well, where did you get that? So where did he get that number? Show the additional replies that are offensive. Yes, please. No, he doesn't. He didn't say. He didn't say. So I don't know why he posted 616. All right, well, let's look for Nick Timmeros here. Job growth wasn't as strong in the year ending March as initially reported. BLS revisions show the economy added 818,000 fewer jobs than previously reported over the 12 months ending in March. That would lower monthly payroll gains, which were initially 246,000 on average, by 68,000 a month on average. This means job growth was 1.4% in March 2024 versus the previously reported 1.9%. This is a revision of 0.5% to the employment level and is the largest since 2009. Does that mean they lied? Well, That's what people are going to say, but I don't actually know how they come up with those numbers, so I can't really say that they lied. I kind of suspect that they did, though. I kind of suspect that they have a methodology that is kind of helps them report a number that's higher than it actually is. I think that they are following a methodology and everything, but I'm kind of thinking that maybe their methodology should change. Okay, so there was a little bit of a long there. Not really seeing the order flow come along on this long, though. In fact, the only really super strong order flow that I'm seeing in the treasuries at the moment is the 30-year bond. The 30-year bond is just selling hardcore, and the yield is changing pretty dramatically. The yield curve is a lot steeper now. So to highlight what I'm showing you here, a lot of cumulative delta selling in ZB. The yield curve has steepened, so that means, again, when it's diagonal, that means, right? Diagonal up, you're buying the short term and you're selling the long term. That's what that means. So, but then when you look at the price, it's like all over the place. So, what a mess. Back to 24, huh? Well, look, here's your opportunity to buy it now, Seth. You said you were going to buy it, didn't you? Nope. Too late to do anything now. Well, I'm glad that I didn't take a live trade. Because that was a mess. But I'm also glad that I tried to take a sim trade and had fun with it. Actually, this was the most fun I've had on the stream in a while. Not that I don't have fun every day, but like today we particularly had fun. You know what I think was the funnest stream that we ever had was the one where we had the thing that translates and reads your comments out to me, and we gave it a Chinese accent, and so you guys pretended that it was like a propagandist from China. That was so effing hilarious. That was one of the funniest streams. But today we just had fun trading. And it was an unusual situation. It was kind of fun. It was kind of fun. So I can, I can take that as a win, even though we didn't make her lose money today. What else? Plus, interesting things happening, like the Rasmussen report. By the way, I'll come back over here to Rasmussen with Mark R. Mitchell. Again, their daily tracking poll showing a big change in, the presidential race. When I come down through here, do they have a new daily? No, this was the 11 hours ago that I showed you earlier. So I don't think that they have a new one. Maybe we should be watching that like every day. I don't know. Should I add him to the lists? Let's add him to the list. We'll follow him. Okay. Well, it's time for me to get going, guys. And we'll see if they attack those highs. I kind of feel like at this point now, if they do that, if the flows are long because of the auction and the FOMC meeting minutes and all of that, and they are able to breach those highs again, you could see some excitement. I don't know if it's going to happen, but it's just kind of a possibility out there on my radar. If you're going to keep trading, you might want to keep an eye on. It's time for me to get going. That was the bell. So I will see you guys tomorrow, I think. You know what? I will start the stream one way or another, because there's no way that they're going to have me in for surgery at like 6:30 Utah time, right? But I don't know when they're going to want me to come, so I have the day off. If it's maybe, what would be nice is if they scheduled my surgery. I'm getting a bone spur taken out. If they schedule my surgery later in the day, then I could use the whole day to paint. Well, paint was one thing, but also I could write a script. Now that we got this headrest, I think we can finish the video about the seats. I thought that the whole seat odyssey was interesting, and we'll make a good video, and could maybe make other future videos that would help the channel out, even though they're not related to trading, so maybe it's a bad idea. I don't know. We're gonna do it anyways. I don't care. Okay, now I'm just rambling, guys. I will see you tomorrow, in some way. In the meantime, stay excellent.